Welcome to Yahoo Finance's flagship show, The Morning Brief. I'm Julie Hyman. Let's get to the three things you need to know today. First up, President Trump threatening Brazil now with a 50% tariff over its domestic political affairs, sending the country's currency plunging as the U.S. sharply escalates a dispute with Latin America's largest nation and its leftist leader, Lula da Silva. The president also confirming a 50% tariff on copper. That will start August 1st, in a move that could hurt American producers of everything from automobiles to appliances. Meanwhile, investors largely shrugging off trade risk in the market. While U.S. stock futures are marginally lower, equities are trading within points of their record highs. The exuberance is also playing out across asset classes, with Bitcoin reaching a new record high of $112,000 per token. It's since backed off that level a bit. And on the earnings front, Delta is soaring today, shares jumping after the company reinstated its full-year guidance. CEO Ed Bastian said corporate travel is strengthening and consumers have become, quote, a little numb to the ongoing trade disputes. Delta was the first major U.S. airline to pull its outlook, remember, in April. That was after President Trump launched his campaign to reset global trading rules. Let's get a check in on stock futures here. We see a mixed picture at the moment. The NASDAQ, where we have seen a lot of strength in recent days, especially from the likes of NVIDIA, which reached that $4 trillion market cap milestone. Little changed here today, but slightly to the upside. The S&P and the Dow pointing to a slightly lower open. Let's turn now to our top stories of the day. The trade latest in Washington. President Trump threatening 50% tariffs on Brazil. Meanwhile, investors are shrugging off tariff risk, with the NASDAQ notching a new record high and Delta soaring today after restoring its full-year earnings guidance and topping second quarter results. Is the worst of the trade war behind us? Joining me now, Washington correspondent Ben Worschel, senior reporter Ali Canal live from the NASDAQ, and senior autos reporter Praz Subramanian. Ben, let's start with you here. And this Brazil trade threat, which is different both in magnitude and in reasoning from some of the others that we've gotten.
For sure, yeah. So I can't tell you whether the trade war is the worst of it is behind us or it's ahead of us, but it's definitely getting more complex this week. That's my kind of overall takeaway this morning, partly because Trump is bringing in all these outside issues. Brazil is the number one issue clearly here. He's made this trial of the former president now a centerpiece with trade in the middle of it. We've already seen some sharp back and forth this morning. Brazil's current president is responded sharply saying we're not going to take orders from everyone. So tensions are rising there, based on with trade now in the middle of it. Another one of this theme that I would add is India. We've been waiting all week for a deal with India. Another sort of outside issue Trump has really elevated in recent days is BRICS, this alliance of countries outside of the United States. He's saying he's going to put a 10% tariff on any member of BRICS, and it's forced India, according to one report overnight, to kind of try to reassure Washington that it's not behind every idea that BRICS is behind. The big issue there is an idea for a rival to the dollar, which economists say is unlikely, but is part of the BRICS platform. So a third headline to sort of flag to that we're watching today is Trump's self-imposed deadline for either a letter or a deal with the European Union. So that's another big trend we're watching today. It all comes, as you mentioned at the top, as markets kind of take a kind of nuanced look at this. Partly because nearly every one of these issues has an August 1st start date. So I think there's a lot of waiting and seeing going on to see how all these different complicated trends play out in the next few weeks before any tariff rates actually change.
And right, to Ben's point, Ali, this brings up the idea of the so-called taco trade again, right? Trump always chickens out. If you don't have to worry about it today, you don't have to worry about it until August 1st, with this actually going into effect. And the market seems to be saying, we're not so sure it's actually going to go into effect.
Right. The market seems to be pricing in the possibility that we will continue to see these deadlines extended and that everything's going to work out. And really, this has been a mentality we've seen since those April bottom lows. We've had retail traders aggressively buying the dip. That's led to a lot of momentum chasing, FOMO chasing. You can look at certain stocks as prime examples of this. Palantir, for example, was the best performing stock in the S&P 500 for the first 6 months of the year. Earlier this morning, Wedbush analyst Dan Ives upped his price target to $160 a share. We're currently trading just above 140. And it wasn't too long ago, Julie, that we were talking about Palantir as a meme stock. And now strategists tell me that that's definitely not the case anymore. And then when we talk about momentum, we have to mention NVIDIA. It hit $4 trillion in market cap, the first publicly traded company to do so. And even analysts who cover that stock say that there's potentially more room to run. And we have these individual stocks that are outperforming. But then you look on a sector basis, and we have record highs for financials, communication services, industrials. So it hasn't just been all concentrated in tech and AI. We've really seen this broadening of the rally. And we know for a rally to be sustained, we need to see that broadening play out.
Yeah, and speaking of broadening, let's get to Delta Airlines. Pras, the shares are having quite a move upward here this morning. And this also seems to be continuing this theme when even the CEO, Ed Bastian, is kind of saying consumers feel okay, right? They're sort of looking past the tariff situation.
I mean, Delta stock moving like a meme stock, like Ellie mentioned, up at 12% here. That's a monster move for Delta. You know, look, they reinstated that guidance. That was a big deal. They pulled it in April, like you mentioned. But, you know, Ed Bastian, exactly, he's talking about certainty and the return of clarity because of these trade deals and also the big, believe it or not, the big budget bill. He said to me, quote, "I think greater clarity is being received. The tax bill being approved and removing uncertainty there with the Reconciliation Act was helpful in terms of understanding what the ground rules are. And it's led them to, again, reinstate their guidance. And also, he adds that sees demand improving in the second half of the year. It's those premium buyers. The premium business is doing quite well. It's like growing more than its economy or main cabin business. That's a big deal for Delta because that's sort of where their money is made. In addition to co-branding their credit card stuff, their remuneration, they got $2 billion from Amex just last quarter alone. So they're doing quite well. They're focusing on the higher-end consumer. He also told me that the budget airlines, those guys have an overcapacity problem, and there might be some sort of shrinkage there in that space.
Well, and it's interesting because Steve Trent, who we talked to the other day, a longtime airline analyst, he kind of said the budget airlines, he's not interested in recommending those right now because of those some of those issues, and also because he says the premium airlines are doing better. Business travel, Pras, I'm curious to drill down into that a little bit because not only is that a read on how Delta is doing, maybe it also is a little bit of a proxy to tell us how other businesses are doing if they feel comfortable enough to travel.
Yeah, I think it's all part and parcel of that. The confidence is returning, clarity is returning. Businesses are willing to spend more because they think that, maybe there's trade deals down the line. We're talking about, Ben mentioned the EU. Maybe there's a 10% trade deal coming there. If that happens, that's going to be a huge boon for, from the certainty point of view. Businesses will want to come back. And, Delta, they kind of lump the premium business with their high-end leisure and also their professional and business travelers. They all spend more money. I think that's part of the big question, or the big reason why Delta is such a solid performer in the space, both from a stock point of view today, but also it's known, historically as one of the top, quality and on-time businesses too. So it's all sort of coming together for Delta. But you're absolutely right. It's that certainty. It's a return of the business traveler. And he also mentioned to me that the international business is actually quite strong too. But it's mostly Americans. 80% of their tickets on international tickets are domestic purchases, not foreigners.
So, Allie, I remember when it was the same company, Alcoa, that came out and kicked off earnings season every time around. Now our focus kind of seems to shift to who's going to be first out of the gate and set the tone. So what can we sort of extrapolate, if anything, right, from these Delta numbers to the rest of earnings season?
I mean, Delta reinstating guidance, and that guidance was solid. Delivering on those earnings results, I think, is key for the rest of earnings season. And I think strategists have been saying that this is a good setup because of that low bar. A lot of companies came in to the second quarter basically saying that they weren't sure how things were going to pan out. But now there seems to be a lot more clarity. This is something that Ed Bastian specifically referenced, that there's just more knowns at this point when it comes to trade, tariff, even the tax bill. So that allowed them to reinstate that guidance. I believe that's something we're going to see from multiple companies. In fact, to what Savita Supermaniac of America wrote in her upgrade for the S&P 500 target earlier this week. And she said that you cannot underestimate corporate America. And we've seen these publicly traded companies really insulate themselves from a lot of this uncertainty. And that's been key to driving stocks higher and will be key for this earnings season. So Delta coming out of the gate, stating guidance, outperforming is a good sign for the rest of Q2.
All of this said, to go back to sort of our initial point here, the market kind of looking past the tariffs, pushing it back to that August 1st deadline. Ben, I just want to come back to you for a final thought here because the president has said, August 1st is that firm deadline now, right? And people you're talking to in Washington, can we take him at his word?
Here in Washington, most conversations don't take him at his word with that. I would note that Trump said earlier this week he planned to be done with trade deals this week on July 9th, and then of course that deadline shifted. This comes as sort of this shifts over and over again. And the larger point that I hear from trade experts, people that have actually negotiated these kind of things, is that these takes not just weeks or months. So you can extend this 3 years, and we might get very limited deals, which we are expecting. India and EU and all these different ones could have some progress in the next 3 weeks, but this is not going to be done for months and years, and probably for the entirety of Trump's terms, just because trade deals are so complex and so complicated. And I haven't even mentioned China, which is the biggest one of them all.
Yeah, I think that's what Wendy Cutler of the Asia Society said to us the other day. We're in for this for the whole term, this whole tariff back and forth. So we better get used to it. The markets already have, I guess. Ben, Ali, Pross, thank you so much. Appreciate it. Well, shares of WK Kellogg jumping double digits on news that Ferraro is set to buy the company in a deal worth $3 billion. Yahoo Finance senior reporter Brooke De Palma has the details. And Brooke, this bringing together what we think of most notably with Ferraro is the candies, right? With Kellogg, which most Americans probably think of as synonymous with cereal.
Absolutely here. WK Kellogg, that his stock was up more than 50% in early hours trading, now up around 30% this morning as this news of the deal broke that the chocolate brand, as you noted, Ferrero Rocher, that's behind Nutella as well, will acquire WK Kellogg. Now, the cereal company, WK Kellogg, is behind brands that many Americans know, like Fruit Loops and Frosted Flakes. It's going for $23 per share, or that equates to $3.1 billion. Now, this gives the Italian candy maker really a deeper footprint here in the U.S. And as of Wednesday's close, WK Kellogg had a market cap of roughly $1.5 billion. So certainly investors pleased this morning with this $3.1 billion price tag. Now, this offer comes as that cereal maker, WK Kellogg, has really been under pressure here. Its first quarter results fell year over year, with net sales down more than 6% and net income down more than 45%. And in the latest quarterly results, well, the company cut its sales guidance. We know that cereal has not been doing well, and the company now expects a decline of 2% to 3% for the year, and earnings to come in the range of down 2% to flat. Now, this would mark Ferrero Rocher's, or Ferrero, the parent company's latest acquisition. The nearly 80-year-old company really has been ramping up its portfolio as of late, including purchasing Wells Enterprise behind the ice cream brand Blue Bunny. It also bought Nestle's U.S. chocolate business, so another way of getting in here, among others. And also keep in mind, it's been quite the run for WK Kellogg. Of course, Kellogg's had split into those two companies, its cereal business, which is this one, WK Kellogg, and that snack business, Kellanova, back in 2023. And also now Kellanova got bought out by Mars Candy. That deal worth far more. If you could see right here, a premium of $35.9 billion. Of course, Kellanova still behind brands like Pop-Tart and Cheez-Its. So lots to track this morning, but certainly investors really sweetening up to the deal.
Good punnage there, Brooke. Appreciate it. Thanks so much. Coming up on Morning Brief, we count you down to the opening bell on Wall Street, with stocks set to open near record highs, but right now pointing in the wrong direction. We'll be right back. Now time for some of today's trending tickers. We are watching Tesla, Conagra, and Taiwan Semiconductor. First up, Tesla announcing its annual shareholder meeting will take place on November 6th. That news coming after a group of investors urged the EV maker to set a date. The previous shareholder meeting was held in June of last year, and since then, Elon Musk's growing political ambitions, the CEO's public clashes with the president, and slumping vehicle sales have worried investors. Tesla shares are off 38% from their record high in December. Next, snack food giant Conagra Brands' fiscal fourth quarter sales coming in below expectations as the company attempts to navigate a challenging macro environment. The company behind Slim Jim, Angie's Boom Chicka Pop, and dozens of other brands forecast flat organic sales growth for the upcoming year ahead, citing headwinds from elevated inflation and broader uncertainty. CEO Sean Connolly noting the past year proved more challenging than we anticipated. The company plans to invest in frozen food, snacks, and enhance its supply chain resiliency in the year ahead. And finally, Taiwan Semiconductor's first half revenue surging 40% thanks to booming AI demand. The company's June revenue rose 27% from a year ago, but dropped nearly 18% on a month-over-month basis. TSMC is a supplier for NVIDIA, which hit the $4 trillion market cap threshold briefly on Wednesday. And you can scan the QR code below to track the best and worst performing stocks with Yahoo Finance's trending tickers page. Well, futures searching for direction after the Nasdaq notched a fresh record high. Joining me now, Brent Schutte, Northwestern Mutual Wealth Management Company CIO. So, Brent, as investors are weighing what to pay attention to, they seem to be looking past tariffs largely. So then you've got earnings and you've got the Fed. Which should investors be more focused on right now?
All the above. I mean, I think investors are just looking past everything that's out there and judging that nothing is going to upset the apple cart, which I'm not for sure is going to occur. Look, we've only been with tariffs for 3 months, pretty much, and we don't know yet if they're going to filter through into higher inflation or a slower economy. I think there are risks on both sides of the equation, as well as risk on the earnings side. And that's where I think investors need to pump the brakes just a bit and make sure that they're following their strategic asset allocation and staying true to their financial plan.
And what to you, okay, so if we're paying attention to everything, which do you think is the potential biggest risk here?
Look, I think the economy has shown signs of weakening. If you look at the labor market, yes, it's remained resilient. But for the past 3 months in the BLS Labor Department report, you've seen less than 50% of the industry is actually hiring, which historically has been a warning sign. You've seen continuing claims tick up. On the consumer spending side, you've had 0.5% quarter-over-quarter growth in consumer spending in Q1, and the last 2 quarters have been negative 0.3 and positive 0.1. This is where I think you're seeing signs that the economy is slowing down. I think consumers or investors are thinking it's going to speed back up, and that's where I think there are still risks to that equation, especially as we continue to find more and more about tariffs and what direction they're heading, which I don't think we have certainty yet.
And Brent, it's interesting because we've had a number of strategists come on the program recently and say they view the recent tax and spending bill as stimulative, right? They look at things like some of the tax changes for CapEx by companies, and they seem to think that maybe that could mitigate some of the weakness here. How are you thinking about that?
It certainly could. I guess the question out there is which side overwhelms which and which isn't priced into the market. And at the S&P 500 trading at 24.5 times trailing 12-month earnings and 23 times forward 12-month earnings expected to grow 7% appears a bit optimistic to me. The good news is there are opportunities in other places, and I was heartened as I came on the show. You were talking about some of the older school companies that I grew up with, Kellogg, Delta, things of that nature, not just tech stocks. This is where I think there are opportunities for investors to broaden their horizons and think about small cap stocks, which trade at the second lowest valuation relative to large cap stocks in the 31 years that I've done this. The other time was June of 2000. I think we're all ignoring that international stocks are up around 20% year to date. And I think that's going to continue into the future because I do think the administration would like to see the dollar lower, which serves as a tailwind to US dollar-based investors' investments in international areas. And so my big message to investors is to not just concentrate in those parts of the market that have done well the past few years. I do think there is a broadening that's going to occur one way or the other. And that's where I think there are opportunities in other places that just haven't worked as well recently.
Brent, let me ask you about small caps specifically, right? Because people have been, or certain investors certainly have been touting small caps for a while here. They haven't worked, right? And it seems like perhaps it's at least somewhat contingent on rates coming down. Do you think that's still the case? Do you think rates need to come down in order for small caps to work?
I think there are two things here. One, I mentioned June of 2000. That was before a recession, so rates did come down a little bit during that time period. That's typically what resets the cycle. It doesn't have to be that way. The initial shock of interest rates is just that, a shock. We've had the same level of interest rates for the past couple of years, and so now companies are adapting to that. There are also positive things in that one big, beautiful bill, such as deregulation, such as lower tax rates, that will actually probably serve as some sort of a stimulus to small cap stocks. And so to me, I go back to valuation. I talk about that. People don't pay attention to that today, but I think they will in the future. At least they have historically. And that's where I think anyone with a time horizon more than the next 3 minutes should think about owning small cap stocks for the next 3 to 5 to 7 years, because I do think you're in for a cycle of different market leadership. And that is what historically has happened. And I think it will happen once again.
Brent, we're going into earnings season, of course. And for those of us who probably are holding stocks more than the next 3 minutes, what do you think is the key question that investors need to be asking when they're trying to decide, what companies to look at as they're listening to and reading all the earnings news?
I think it's going to be forward guidance, and I know that's kind of an easy answer, but I think people are going to want to know what's the impact of these tariffs on each individual company, because that's where I think the question is going forward. The other thing, I think people have paid attention to earnings revisions only. That's been a powerful driver of stocks for the past few years. At some point, people are going to start thinking about what they're paying for those earnings revisions. And so you have some large cap stocks outside of technology that trade at 40 to 60 times forward earnings. This makes no sense to a person who's done this for 31 years, especially in areas that don't grow that fast. It reminds me a lot of the late 1990s in many cases, and that's where I just think you need to think about things that have a margin of safety. You need to think about valuation a bit more. You need to think about changing macroeconomic headwinds going forward, which may favor international stocks and even small and mid-cap stocks.
A plea to go back to the basics. I like it. Brent, thanks so much. It's good to see you.
We see you too.
Coming up on Yahoo Finance opening bid, executive editor Brian Sozzi joining us now. So Brian, what's coming up today?
Julie, what's going on? Well, lots going on here in the markets. I'm really locked and loaded on all things Delta. Good quarter out for them. I like that they shouted out stabilizing demand, big third quarter guidance, and to see renewed or restored, I should say, full year guidance kind of gives you a hint that maybe other big companies this earnings season will restore their guidance or at least put out a range, because they didn't do that 3 months ago because of the trade war. And then last, Julie, digging into this Kellogg, WK Kellogg deal, I actually think it is not a good deal for Ferraro, but who am I to argue with a long storied company like that makes chocolate? But I'm going to try to argue the point.
A little chocolate covered popcorn action? Like, can we see some good
Julia, I get the synergies, but nobody's eating cereal anymore. Let's just be real. $3.1 billion is a lot to pay for a cereal company that's putting up horrible results.
You know what cereal I eat, but we'll take it offline, Saz. That does it for Morning Brief. Much more ahead on Yahoo Finance, including opening bids. Stay tuned.